Hey, happy Monday, everybody. So, interesting weekend, right? Everything's reopening. Here in Hawaii, it's going real well. Uh, Look, Hawaii is a good example, too, right now, guys. Let me get this camera. Let me get in the middle here. It's Monday, right? Everybody's making weekend adjustments. Anyways, look, even in Hawaii, right? Last week, the end of the week, our mayor, Rick Balangiardi, opened up weddings, right? Where restaurants are open. Waikiki is bumping. There's lots of tourists. Beaches are full, parks are full. Everybody's kind of getting back into it. They had to shut down another rave out in the country. So the kids are back at it, right? Everything's kind of rolling back into normal. Vaccinations are being distributed. Things are going real well, right? People are following all the rules and stuff. It's a great example. I tell you guys, uh, there's a big difference in Hawaii. 3 months ago, if we had the last couple of days, we've had over 100 new cases per day, which hasn't been like that for a while in Hawaii. We've been in the low double digits. But we understand that in order to accomplish this reopening, there's going to be a little surge in cases. No reason to panic. You address them, you contact trace them, you do what you need to do, and you move on. You continue opening. We put 10,000 people back to work, over 100 people that we have to address the COVID with, right? So it makes sense, and this is a good thing. I always talk to you guys about the media and their Jesus Christ and their my God, their pom poms and stuff. What happened with Florida, right? With their governor and stuff, and the Biden administration, Neanderthals and stuff. I think this Biden administration couldn't be more wrong on this. I think the name calling really is just politically motivated. There's not a whole lot of common sense behind it. So, look, guys, why is this important? Why am I talking about this? Because we need this economy to get going. Now, we'll get some labor reports on Thursday, guys. It's kind of a soft start to the market today. Market started out real red, and now it's kind of pushing up a little bit. Retail's doing okay. Apple's actually having a good morning. Banks are the problem right now. We had a hedge fund that had to unwind some margin, and guess what? Credit Suisse was involved. So they're down about 17%. They're a Zaire bank, but they affect the whole banking industry. So banks are getting hit today, and they're getting hit pretty hard. Uh, Again, the hedge funds, right? Who are we going to blame? The hedge funds. That's the blinky light the last couple weeks. But look, guys, it plays important, right? Because this market move this morning really was caused by the banks, but the reopening is going well. It's like I always teach you guys, stay off social media, stay off mainstream media, okay? You just look at headlines, stay off opinion shows. Definitely stay off opinion shows because they're wrong. They're all wrong. They're agenda based and they're wrong. They're wrong about this reopening. They're wrong about a lot of things. But we're focused on the economy. So we want to stay positioned, guys, right now. Like I've been talking to you the last couple months, you should have been buying some of these great dividend stocks, right? Great companies, because these are the companies you can listen to all this rah-rah at CNBC. Goldman has these 5 stocks that are recovery stocks. What the F is a recovery stock? Stock's either a good company or it's not, right? And it's either going to do well in the future. It's a recovery stock. Okay. All right. Then you better start selling your Netflix, right? I'll tell you what's not a recovery stock is Tesla. Anyways, so look, guys, it's kind of a fun morning. And I encourage you guys to have a little fun too. Like I said, the weekend went really well, a lot of reopening. March Madness, right? For you basketball fans, some fantastic games. Go UCLA, right? Bitcoin had a good weekend. It's back around that 58,000. Oil is back over $61. There's a lot of stuff happening, but all you're seeing in the media is negative, 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 negative. And it's usually political agenda based. Let's focus on the market, guys. Now let's kind of roll into the week. And what I mean by that is we're positioned, right? You guys know, as a company, we've got some option plays out there. We've got them way out. We got a couple energy plays. We got a couple retail plays going on. We got one short going on right now, but it's kind of a barometer. But other than that, our portfolios, the other part of our portfolios are rock solid, ready to get some great dividends, ready to withstand a sideways motion. Let's go take a look at the market, guys. Since it's kind of a quiet morning, let me pull up the market here and we'll take a look together. Let me share my screen. All right. Okay, guys, thanks for having patience with me there. And let's move this guy over. You can see this is Tesla, but let's take a look at the spider this morning, guys. Let's look at the SPX, which of course is the S&P 500. Now, I always go to the SPX, guys, and I've been asked this before, why? The Dow is really your window for the stock market. It's what the world looks at. It's what all the CNBC and everything. But if you watch some of the better, more trustable TV personalities like Charles Payne at Fox Business News, I recommend people watch Charles Payne. He has great guests and he's very even keeled and he's not a cheerleader and stuff, but he believes in America, he believes in the economy, and he gives good advice. If you watch his show all day long on Fox Business News, all they show is the Dow, the Dow, the Dow. But that time during Charles Payne, they show the S&P 500. Why? Because he knows that's where the market is. You see your Dow right now, you're conflicting with your NASDAQ, right? That's all just your value trade we've been talking about the last couple of weeks, which is people are rolling out, institutional money's rolling out of that overvalued tech, taking their profits and putting it like we did into great stocks that it can weather maybe a long, long year, right? Long sideways year. And you can see it, right? We go up a little bit, we go down a little bit, we go up a little bit, we come back down a little bit. But it looks like we've made a new level here, and we'll see how it handles that level from here. Other than that, guys, I think it's prudent right now to kind of let the market tell us a little bit. And, you know, you should have some good positions like we do. We've got an energy play all the way out to September. You know, give yourself a little bit of time and stuff, but don't get caught up too much in this media frenzy, okay? This feeding frenzy of clicks. That's what we call it in the trade room, feeding frenzy of clicks. But other than that, guys, look, just a quick morning this morning, because there's just not a whole lot to talk about. You know, the banks kind of hit the market early. You can see the Dow recovered. The NASDAQ didn't. Why? Well, the NASDAQ, banks on NASDAQ. Well, there are some banks, but the big banks really are on your S&P 500. They affect your S&P 500. Other than that, guys, you can see the Dow. It's just a little bit red, a little bit green. You can see that NASDAQ's down another almost 1%. S&P is just flat. It's down about 0.5%, but it's just kind of holding its level right now. And you saw from the chart, it's just in that trading zone right now. Now, this is what I want to close with, guys, something I've been talking about for weeks. What do you do? Everybody's used to the last 15, 20 years where, you know, it just goes up, right? And you buy it, and even if it doesn't go up right away, you just wait. And at some point it goes up. That's because we're in this big bull leg. Now we're kind of in a sideways market. How do you play a sideways market? And that's what we just taught you is, first of all, you build your, like these institutional money does, you get some great stocks, maybe about 40% of your portfolio in those great stocks. We give you one every week. And then the other, maybe 40%, you dabble with your options. But on your options now, you cannot be petulant and you cannot be short-minded. You have to get a nice position, good positions with plenty of time to give this market time to gyrate, because 1 minute it's up 100, the next minute it's down 100. And the time decay just kills you on short leashes. And so that's what I want to close with, guys. And I'll close with what I always say, and you guys are probably tired of hitting it, right? This stock market is simply a vehicle to transfer money from the impatient to the patient. And that is what's happening right now. All right. The patient money is taking its money back. All right, guys, let's see how this market shakes out the rest of the day. Just that Dow just went back red. But other than that, it looks like a kind of a mellow morning. We'll see how the news goes and stuff. We still got we're not allowed to use the word crisis, but we've got a event going on at the border. A lot of stuff, right? Seattle inflamed over the weekend, despite all the good things that are happening. You know, there's some unrest right now. But other than that, the boat, the ship. I'm not supposed to call it a boat. It's the ship that was blocking the Suez Canal. Right before I went to do this recording, they've got the boat moved. So all that media over the weekend and last week that we're telling you it take months to move this ship. Again, who's the enemy of the people? The politicians and the media. Very simple, guys. Don't listen to either one of them. Okay. All right, guys, you manage your money, you stay smart, and you stay long. Okay. I'll see you guys in the morning. Don't forget, tomorrow is Tuesday. So, stock of the week day. All right, guys. All right, let's see how this market shakes out.